Today is Wednesday, January 20th, and right now in the late morning hours, the Dow is down around 378, so it's a pretty big sell-off. You can see on this chart of the S&P 500 breaking down below this very important support level. I like to call it the neckline of this head and shoulders pattern. It's not a classic pattern, but I do see it there. It has all the proper criterion. Anyway, this looks to be a breakdown. Of course, anything goes into the close, but this does look to be the signal that things are going to get even worse. Next question is, how far down can this thing go? And we do have a few tools we can use just to measure. I'm going to measure the size of this pattern and project it down from the breakdown point. So I'm just going to drop a line here just to measure the height, and now I'm going to pick it up and bring it down from the breakdown point. And I cheated a little bit. I put that line in advance because I had already gone through this just to save some time. But that is around 1600 on the S&P 500 from its current 1825. Obviously, pretty bad move. And it's just simple measuring of the pattern. Now the next question is, what is this line below that? And for that, I'm going to have to zoom out a little bit. That is the top of the major trading range over the last, say, 15 or so years. Actually, more than that. There is the rally into the tech bubble, the rally into the housing bubble, financial crisis. So it's all here. I did not believe that this was the start of a secular bull market on the breakout here. The other indices didn't look like this. So the S&P was kind of on its own there. But we can use this level as a downside target for a correction. I think that perhaps a test of this level might be the end of the secular bear market, believe it or not, the secular bear market that began in 2000. You can see that it really went nowhere for over a decade. And yes, it broke out here, but this is just all QE infused, and I think it's pretty artificial. So a test of this breakout might be the place to say, the secular bull market is back. And why do I say that? It's going to be difficult to see on charts like this, but I've noticed a pattern over the last 100 years or so that each of these secular markets was about 18 years in length. So the secular bull from 1982 to 2000, secular bear from 2000 to perhaps 2017 or 2016. That's close enough to the 18 years. So anyway, this is where I'm looking. Of course, things can change. We don't want to just get married to an opinion, but this is a downside target in the 1600 area on the S&P 500. And of course, I don't expect it to get there today or tomorrow or the next day. It could take quite a while, or it could be quick, depending on what happens between now and then. But it does look like the market is set up for lower prices.